Hello and welcome to U.S. Stock Insights. We're diving deep today,
Mm.
but maybe not into a traditional stock. Instead, we're turning our attention to Bitcoin.
Mhm.
Specifically, we're looking at, well, unpacking the insights from a recent article. It zeroes in on a particular technical chart pattern,
Right.
suggesting it could be a major signal for, retail investors trying to figure out where Bitcoin's price might be headed.
That's exactly it. Yeah, the source we're digging into, it identifies this formation on the Bitcoin price chart. They think it could mark a pretty significant turning point. It's all about reading the story the market tells through price action.
Right.
And this article thinks Bitcoin's chart is telling a very specific story right now.
Okay, let's unpack this then, because the article really hinges on something called a tweezer bottom pattern.
Yep, the tweezer bottom.
It says this pattern showed up on Bitcoin's chart around June 5th and 6th. Now, for someone who isn't staring at candlestick charts all day,
Which is most people.
exactly, what is a tweezer bottom, and why should anyone care?
Well, it's interesting, how these visual patterns, just simple shapes on a chart, can potentially give clues. Clues about shifts in supply and demand dynamics underneath. A tweezer bottom is considered a bullish reversal candlestick pattern.
Okay, bullish reversal, so suggesting things might turn up.
Potentially, yeah. The candlesticks are those shapes on a chart showing the open, high, low, close for a period, like a day. A bearish one is usually red, means price closed lower. Bullish is usually green, price closed higher. Simple enough.
Got it. So the shape shows the price journey for that day, basically.
Exactly. Now, the tweezer bottom, specifically, it tends to appear after a clear downtrend. And that's key
Why is that key?
because it suggests that the selling pressure, the thing pushing the price down, might finally be, losing its punch. The pattern itself, it's formed by two consecutive candlesticks. The absolutely critical part is that these two candles have the same low price, or really, really close.
Huh. So it's like the price hit a floor, bounced off that exact same spot 2 days in a row. Is that where the tweezer name comes from?
Precisely. Yeah, the tweezer is those identical low points, like a pair of tweezers grabbing hold of a specific price level. And in a typical tweezer bottom, the first candle is bearish, which, well, that makes sense if the price has been falling,
Yeah.
right? It shows selling continued.
Right.
But then the second candle is bullish. Price recovered, closed higher, and crucially, the low of that second bullish candle matches the low of the first bearish one.
Okay. So let's bring this back to Bitcoin. The article points out Bitcoin was in a downtrend, pulled back from that all-time high in late May, around, 111K?
That's the context, yeah. Down from about $111,000.
So does the pattern the source sees around June 5th and 6th fit this textbook picture you described?
According to this source, yes, pretty
Okay.
clearly. They show
Okay.
the chart, June 5th, you had a move lower, a bearish candle.
Mhm.
Then June 6th, you saw a recovery, a bullish candle.
Oh.
But the key is, when you look at the absolute lowest point reached on both those days,
Mm-hmm.
they're essentially identical. That double tap low, same price level after that prior downtrend. That's what the source says is the textbook tweezer bottom.
So, okay, sellers push down on the 5th. They tried again on the 6th, but something stopped them dead at that exact same low point both times.
That is exactly the interpretation the source is emphasizing.
Yeah.
Despite that selling pressure on the 5th and maybe more pressure early on the 6th, buyers stepped in and apparently very powerfully right at that specific low.
Wow.
They soaked up all the selling there, stopped the price falling further, and then actually managed to push it back up. That's what created the bullish candle on the 6th.
It really paints a picture, doesn't it? Like a battle line drawn at that price. And the buyers, at least for those 2 days, won.
It absolutely does.
Mm.
The fact price failed to break lower on that second try, and especially with buyers then pushing it back up significantly.
Well, this analysis suggests a couple of things.
One, strong, committed buyers at that level. And two, importantly, maybe the sellers pushing down are just exhausted. Or maybe just unwilling to sell below that specific price,
Okay.
which implies that price level has become a pretty solid area of support.
All right, so if this analysis holds water, and that was a genuine tweezer bottom, what does the source say this pattern usually forecasts? What's the bullish case they're laying out?
Well, if a tweezer bottom gets confirmed, it's widely seen as a probable signal, a signal of a reversal of that downtrend that came before it. That specific low point becomes viewed as strong support, like a potential near-term price floor.
Okay, a floor.
And the author's expectation, assuming this pattern holds true, is for a sustained move higher from here.
A sustained move higher. How bullish are we talking here, according to the source?
They're actually quite optimistic. suggesting a potential test of prior highs.
Prior highs, like back towards that 111K level.
Exactly. They believe this pattern could be the launch pad for a rally towards, or maybe even past that level. They even speculate about possibly seeing new all-time highs this summer, maybe even before summer really kicks off.
Wow. Okay, that would be a pretty dramatic turnaround from where things were. Huge news for anyone holding Bitcoin, obviously.
It'd be significant, yeah.
Does the source give any, like, historical context? Any reason they think this pattern might lead to that kind of move?
Yes, they do actually. They point to the one-year chart, and they highlight a similar kind of downtrend that happened in the past, which also led into a similar bottoming formation before a significant reversal and a move higher.
Ah, so there's precedent in Bitcoin's own chart history.
That's what they're arguing. They present this past instance as evidence that patterns like this, coming off a downtrend showing strong support, they can precede substantial upward moves in Bitcoin. It's not just theory. They see it in the history.
Okay, that is interesting. Connecting the pattern to past performance. But like you said, these patterns aren't crystal balls, right?
Definitely not.
So how does the source say we know if this particular tweezer bottom is, confirmed? Is it a valid signal?
Confirmation is critical. Absolutely.
Yeah.
And it doesn't happen the instant the pattern forms.
Right.
It comes from the price action after the pattern.
Right.
So a sustained move higher in the days and really the week following the pattern, that's what validates the bullish signal. The source specifically says that market activity right now, this current week, is absolutely key for that confirmation.
Okay, so watch this week closely.
Yeah. If Bitcoin's price keeps moving higher, holds those gains, it reinforces the idea that buyers are still in control and the reversal is happening. And also, if there's a little dip after the pattern, does that low point from the tweezer bottom hold as support? If buyers defend it again, that strengthens the bull case too.
So this week is about seeing if it goes up and if it holds on any retest.
Got it. But let's talk the flip side. What's the risk? What's the alternative view the source mentions? The what if this pattern doesn't work out scenario? And that's the essential question with any technical analysis, isn't it? These patterns offer clues, but they're not guarantees, not by a long shot. The source is very clear about this risk. They talk about the possibility that the support level suggested by the tweezer bottom might just, fail. It might not hold up.
Meaning that bullish candle on June 6th, the one completing the pattern, could have been a bit of a head fake.
Potentially, yes. The article suggests maybe the bullishness that day was temporary, driven by things other than a fundamental shift in conviction right at that price.
Like what kind of things?
They list a few possibilities. Things like Friday's weekly options expiration causing short-term weirdness, or maybe recent government actions, regulatory news hitting the broader crypto market,
Okay.
or changes to interest rates, swings in the dollar strength affecting risk appetite generally, or even just sentiment shifting towards other safe havens or alternative assets, pulling money away from Bitcoin.
So it might not have been true buyer strength, but just noise, market noise creating a temporary bounce.
That is exactly the alternative view presented. And importantly, they give a very specific level, a level that, if breached, would basically invalidate the whole bullish idea from the tweezer bottom.
Okay, right. This is the crucial risk management point for retail investors watching this.
Yeah.
What is that level, the invalidation point?
The author puts it quite plainly in the article. If Bitcoin cannot hold the $100,000 level, then the bullish theory based on that tweezer bottom pattern is invalidated. Done. A break below 100K would suggest, according to them, that selling pressure is still dominant. The downtrend is likely resuming or maybe even accelerating.
Okay. So $100,000 is the line in the sand. The tripwire, based on this analysis, price falls below that, the signal failed, and the outlook shifts dramatically back to bearish.
Precisely. And again, this brings us back to why activity this week is so critical. Will the price keep pushing up, validating the pattern, keeping that run towards prior highs alive? Or will it stall out, fail to hold key levels, maybe even break below that critical $100,000 mark, which would indicate the pattern was just a pause or maybe a false signal before more declines? The next few trading sessions, this source thinks, should give us the answer.
It really does sound like a potentially pivotal moment for Bitcoin's near-term direction, just based on this one technical reading.
It certainly seems that way from this analysis, yeah. It gives a framework for watching things right now, looking for that bullish confirmation or watching for that key level that negates it.
So let's bring it home. What does this deep dive, this look into the sources analysis mean for you, the retail investor maybe watching Bitcoin? We've got this potential scenario laid out, a bullish reversal signaled by this tweezer bottom, pointing towards maybe testing prior highs, maybe even new highs this summer. If the pattern holds and the price keeps climbing this week.
And on the other side, this analysis also gives us a very clear risk level to keep an eye on. If Bitcoin drops below $100,000, well, according to this source's read, that whole bullish argument from the tweezer bottom is off the table, suggesting the downtrend could easily continue.
Yeah, this analysis really sharpens the focus on the potential outcomes and those key thresholds. It brings up important questions for any retail investor, doesn't it? Like, how do you manage risk with volatile assets like Bitcoin, especially when you're looking at technical patterns that seem powerful but, can fail?
Definitely.
And specifically, based on this analysis, what level would you personally watch most closely for potential invalidation, knowing the risks involved?
Understanding those potential paths.
Yeah.
The bull case if it holds, the bear case if it fails, that's key. And having a specific level like $100,000 pinpointed by this source as the critical invalidation point, that gives you a concrete way to think about risk management here. It's about, framing scenarios, identifying triggers, not pretending to predict the future.
Right. So while the potential upside from a confirmed tweezer bottom looks significant according to this analysis, the downside risk is clearly marked by that $100,000 level. It's analysis from the source, remember, not financial advice.
Right.
But it does give you a specific technical perspective and a key price point to watch if you're following Bitcoin right now.
Exactly. Identifying and understanding these key support, resistance, and invalidation levels, whether from chart patterns or elsewhere, it just provides a structure for investors to think about how they might manage their positions based on how the market actually behaves around those levels.
Yeah.
It's about having a plan, really, for either outcome.
It really makes you think, though, about how much influence these visual patterns, these historical footprints of buyer-seller battles can have on perception and trading, even for something as big and complex as Bitcoin.
Absolutely.
Yeah.
That's psychology baked into the charts. Sometimes it can almost become a self-fulfilling thing as traders react to the signals they think they see.
Food for thought. Thanks for listening to U.S. Stock Insights. If you found this useful, hit follow and stay tuned for more stock breakdowns every weekday.